Hello, traders, and good morning. Today is Wednesday. Tuesday. Getting ahead of myself here, August 21st. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. DJ, Kamal, Mark, Peter, Ty, great to see everyone here in the room. So there is a good amount to discuss today. So the dollar pullback finally. We've been patient with it, and patience pays, as I always say. We've been getting the dollar pullback pretty nicely across the board here. Index coming in some support. Okay, so the immediate downside bias, we're going to kind of soften that today as we head into the U.S. trade session, see how we handle the back of this three-day decline. Today would be the fourth if we got it. On the menu, we'll go over the dollar yen setups. Very clean rebound yesterday off key support. We'll talk about Kiwi dollar, dollar Swiss, Euro dollar, Aussie dollar. Oh, we'll circle back and take a look at the DXY. We might start with that. We're looking at it right now. Gold, dollar CAD, and Pete, I got you on the SPX. Let's start off with the SPX since you asked, and since we're here, let's just take a quick look at where we are in risk. We've been looking at this chart, guys, for a couple of weeks now. We've been talking about it. We looked at it yesterday in the public webinar on Daily FX. Peter, it's a gutsy call. Try and take the short from here, to be quite frank with you. But if it's gonna happen, this is where we want it. This is where we want. That's why when you told me those levels, that's the only way I would play this. Is super tight. 2860. We've been talking about that level. It's the 1618 extension from the ascent off the low that you made in April. You have the high day reversal close. It's a mouthful right here. 2851. We've been basically pressing that level this entire month. Here's what it looks like on a close basis. You know what I mean? So we're there. Okay. If it's going to fail, this would be a great spot. Again, be mindful of the fact that we've seen divergence into the high that we made earlier this month. Here's the second high again. Momentum making a lower high. It would be a good spot to see failure if we're going to get it. Okay. If we're going to get it. Now, as far as event risk is concerned, all eyes are really focused on late week, guys. We do get the annual economic symposium at Jackson Hole. Everyone's pressing to see whether we're going to get any kind of commentary, meaningful commentary from Jerome Powell. We'll cross that bridge when we get there. We can't prep for it, but I do think markets are going to be a little bit more cautious heading into the tail end of the week. Other headlines hitting the markets, guys. A lot of people are commenting on these, reports that Trump was saying that he's not really thrilled with Jerome Powell not being the easy money central banker that he thought he was. Look, guys, this is nothing new. It's not a tradable event. It's not a tradable headline. And don't let it filter into your trading. That's all I want to say on it. Keep your eyes focused on price. That's what matters at this point. These headlines, Reuters and Bloomberg and all them, they're going to run with it, but that's just for clickbait. Okay, for practical purposes, from a trading standpoint, ain't nothing changed. So, Pete, I don't really have anything, pressing on this on the intraday. Okay, so just watch, how we react around that 2860 level. The stop against the highs is pretty much the only way I'd play this. Here's the 240 minute. We'll have to see. Here's the 120. What the market gives us, but this is a good spot. If it's going to fail, this is kind of where you'd want to see it take place, okay? If we pop through this, Peter, again, if you're wrong, you want to be wrong quick, right? So if we pop through this, there's really nothing to stop 2876. That's the next upside target. You got slope there. You got the actual concerted swing highs for the year, and there's really nothing in between. So just keep those levels in mind. Again, we're working against that pivot at 2860. All right. It's a tight stop. Yes, it is, sir. Well done. Yeah, that's the only way I'd play it, Pete. But this is the spot. I mean, it's a good spot for it to fail again. So that's SPX. A little out of order today, but hopefully that helps you out, Peter. Just give you a little bit of color what we're looking at near term. Let's jump into the majors. Dollar yen. What an impressive move. Here's dollar yen on the weekly charts. Okay, we've been following this one very closely. Again, weekly chart really just highlighting failure to break above the 2015 trendline resistance. Okay, we tagged right a critical confluence level, the 200 long week moving average, as well as 618 retracement of the decline from the 2017 high, yearly opening range highs. real strong reversal. Here's the push lower. We talked about 109.91 for weeks. It is so critical, okay, of a level near term. There's so much lined up there that it just pays to pay attention to it. Now, the short side, we were looking for 191. Listen, it was a slow trade. It took patience. If you stuck with it, we triggered last night the limit. If you got a chance to get in on it early in the week, again, 109.91 was the level to look for. Here's what it looked like on the daily chart. 38.2 retracement of the yearly range. Basic trendline support or slope support extending off the yearly low. The 200-day moving average, the 100-day moving average, all converge right here at 109.91. Okay, be stupid not to pay attention to it. Now the weekly chart has the 52-week moving average, just a little higher, right around 110.20 or so. And that's really what we have to focus on a weekly close to continue favoring the downside. So I just wanted to highlight this on the weekly charts. 109.91 was the target, but on a weekly close basis, we need to get below this little region here to really open up a bigger downside move in dollar yen. Here's what it looks like on the daily. Doesn't get much cleaner than that. We registered a low in price at 109.77, okay? And then here's the rebound. We're still, what's the word I want to say? We're still partial to a ultimate downside break of this for a larger decline. But in the interim, and what I told you guys last night was these are two levels of interest for exhaustion, specifically 109.91. And if we got deeper, 109.56 was the lower parallel. I mean, excuse me, the 100% extension. So on the near term chart, here's what the intraday looks like. You have the 100% extension from the decline off the highs right here at 109.56. So for us, it was one of these two levels to look for exhaustion. Obviously, you had an outside 2-hour reversal candle right off the lows, okay, late last night. Here's the rebound, initial resistance that we highlighted, 110.45. We're checking that right now, okay? Very clean setup. Ty says you hit it perfectly. Cheers, Ty. It's not my levels, man. It's the market's levels. I'm just helping you find them. So this is a level of reference that we've been watching since last week. What is the significance of it? Well, it's the weekly open for last week. That's not really important a week later, but certainly we saw that when we rallied through, we grounded out right there. And this week's open comes in just a bit higher. So the weekly open for this week comes in at 110.58. Okay, I'm going to mark that up here real quick. And this is really where I want to see failure right now into the US trade session. If we're going to head lower, we're going to make a move for a downside break. Ideally we fail right here. So I'm actually on the hunt for re-entries on the short side. You might see that Jamie swing trade yesterday has a short entry basically right here at 110.40 on the entry, 110.40, stop 110.73. So, all things held constant, looks really good, okay? And the level was a super clean level. So again, 109.91 is where you would have wanted to take out limits on any short exposure that we were holding from earlier in the month. On the reset here, again, we're looking for entries in this region. I'm favoring against the stop against the weekly opening range high. Ultimately, these are two levels we really need to get through. 109.37 is just a soft target, okay? Just an equal pivot or easily identifiable pivot in price. It's really 109.56. That's the downside break we need to see to get this going, okay? So in the meantime, as I said at the opening of the webinar, guys, the DXY is coming off big resistance. The reversal here, a little bit of a bounce. You know what I mean? We're coming back from oversold conditions. Could see a little bit of a rebound here. A little bit of a pairing of some of those losses before we start to move off. So it's not too surprising to see dollar yen with a nice little rebound off that key confluence support level. Big region, big region, okay? So even if we do get re-entry on this, if you're on the swing side of the trade or if you're trying to get in on the intraday with me, nimble is the way to go. On a move back into 109.90, again, I would take off a little bit off the trade. I'd take off another half or a quarter of the trade, bring stops to break even to see if we can't get that downside break. But this is big. It might take a couple of days to get through this. So all things held constant, who knew dollar yen would have been our favorite trade for the last 4 days. I just want to see if this offers anything here. Oh, Not bad. Okay. Huh. Well, that's interesting. Further highlights that level, right? All right. Ty says DXY bouncing off the breakout point. Yes, very good observation. That's why I was noting it wouldn't be too surprising to see a little bit of a consolidation here, a little bit of a rebound, right? This is what Ty's talking about, guys. This is the breakout region. Obviously, the dollar index came into this level in early June. We tested it again into the end of June. We tested it again in early July or mid-July. Here we are again, failure. Here's the break and acceleration. This is the acceleration point, Ty's 100% right. This is the breakout point on the rally. Here's the pullback. Wouldn't be too surprising to see a little bit of a recovery here. Okay, again, we're coming back from oversold condition. So soften the blow a little bit near term, but all things held constant, still pretty clean. All right, any questions on dollar yen? That is number, I guess we'd say DXY was number 2, dollar yen number 3. Okay, and here's what it looks like on the 240, by the way. Okay, real clean. Next up, Kiwi. So with Kiwi, we highlighted this one yesterday as well. I added a newly identified slope here. I was stoking this out last night because if you go to the let me take a step back. So if you go to the previous update here on the 19th, guys, we were looking at this on the weekly open, and we said, look, nice break. 66.16 was the level we were talking about on last week. That was the level we want to see a topside break to invalidate the near-term short exposure. 66.16 to 66.75, big region near term. Okay, you have former swing lows. You have 100% extension off the decline. You have basic trendline resistance. You have the median line. So we start off the week with a pullback. We noted former resistance, now support, 66.16. We dribbled just a little bit below, and then we rallied. Last night, we highlighted that the move had offered a little bit more of a near-term pitchfork. So when I identified this slope, you can see again the 50 line, nice resistance, 50 line here, break. You saw support, median line break, accelerated. Again, 66.16 support into the open of the week, and here's the stretch. So last night, 66.60 into 66.75, still the big region you want to look for, targeting on the long side to limit out, close out those long positions, and a possible exhaustion region here for Kiwi. So I'm of the mindset that we get the exhaustion if we get up there. Here's Kiwi now. We rallied right into that spot, really nice. Here we are with a little bit of a kind of getting stuck here. So near term, I do think the advance has a little bit of a risk here. Remember, ultimately, the thing that freaks me out about this trade is that the measured move of the consolidation still targets 65.15. So if this is just a rebound within the confines of the slope, we're coming off the lower parallel, get back to the median line, maybe even the upper 50 line before resumption. Here's the lower parallel again, divergence, rebound. This is where you'd want to see failure if we're still heading lower. Okay, so no exposure on the long side of Kiwi. I'm not interested at these levels. I want to see what happens here today. All things held constant, if we fail back below 66.60, guys, on a closed basis, I do think you get the pullback. If we breach this, so be it. I'll miss the trade. I'm not going to chase this any higher. Your next upside target is 67.06 into 67.15. Really nice critical confluence region we've been watching for quite some time. Very similar to what you noted earlier, Ty. This is the breakout point. So the breakdown point there was acceleration. That's your next level if we do break the upside. Now we're in overbought, so again, I wouldn't want to try to fight this just yet, but I'm thinking we get a little bit more of an exhaustion trade here near term. Just want to see what this looks like. So at this point, Near-term support comes in at the weekly open, 66.38. Okay. Bullish invalidation, what would shift the focus clearly back to the downside or at least to the lower parallel, would be right back at 66.16. So no change to any of the levels. The only thing that I'm adding here is just the weekly open at 66.38. That should be near-term support. If you see this pullback hold there, that I'd start preparing, or the expectation would be in that scenario for a topside breach for 67. Not bad. Some channeling here. Resistance, 2-point touch, speculative, 3-point touch confirms, gives us further indication to keep our eye on that 66.38 level. Whoops. There we go. Any questions on Kiwi? Some of these setups, guys, are just been freakishly clean. Even Euro, which we'll go over in a moment, is just kind of stretched a little bit higher than I thought, but what a nice play to the upside in general. Any questions here on New Zealand dollar? Okay. Going once, going twice. That is number 4. Swissy, number 5. So this trade, it's funny that this trade is actually panning out at this point. So I highlighted this, I don't know, a couple weeks ago on Daily Effects. We were kind of just still within the broad consolidation pattern that we were doing. Really, no play was imminent. I kind of just wanted to highlight the major key daily levels. We talked about the consolidation below a critical resistance range, 764 retracement from the decline off the highs we made in 2017, 100% extension from the ascent off the near-term low that we made back in June. Really nice spot, former swing highs. We failed there, and ever since the start of the month, we've been in a well-defined range right below the 618 retracement at 99.91. Okay, we didn't even quite stretch into that. So weekly open support came in at 99. Monthly open support came in at 99. The 618 retracement of that June advance came in at 98.95. Basic trendline support. Now it's only a 2-point touch, so it's not a very strong level, but further highlights that threshold. And if that wasn't enough, your 100-day moving average, all lining up at 98.95 into 99. So the level, I always tell you guys as objective as possible. Take emotion, take dollar bias, take Swissy bias, take everything out of it. Here's your monthly opening range. You set a high, you test a low. You fail at the highs, you fail at the lows, you fail at the highs one last time. Inherently and objectively shifts our focus lower. Nothing fancy. Now you're seeing some failure here early in the session, and again, like I'm saying, the dollar could get a little bit of a kick, so I wouldn't be surprised to see this thing come back up towards 99. But the focus is, if we close the day below the 99 handle, specifically 98.95, the risk is lower for a drop towards the initial 2018 opening range highs. Here's your yearly open. Here's your January high, 98.45. Okay, 98.45. Now intraday, here's what the chart looks like, and here's what we looked like last night. Okay, there's that Swissy level, key support, okay, 98.95, 99, right there. Here's what the intraday chart looked like. There's that consolidation. Again, we had a basic 618 of the advance right there, 98.95, confluence region. If we break, what do we want to see? Acceleration. I call that acceleration. Okay, we're still in oversold territory. If you're holding on to the shorts, do not let go at this point. I would bring my stop to break even. Wouldn't get much tighter than that. Let this thing give it some room. So if it gets back up in this region, don't get too concerned. Ultimately, we're looking for a move lower. Guess what? The 786 retracement of that same advance comes in 98.48. Again, 2018 opening range high, 98.45. There's your first target. There's your first target. As long as you stay below this slope, I'll still continue to favor the downside here in dollar Swiss. But, a break is a break. We kind of need to make some progress below these swing lows. Here's the swing lows from last month, specifically late in the month. Comes in at 98.67. Today's low was 98.67. Okay, so probably should sneak that in here just to kind of give you a picture. All things held constant, sub 99. Risk is still lower in Swissy. Any questions on dollar Swiss? Here's a 240. And again, no change to any of the levels from yesterday. Swiss, that's number 5. All right. So where does that leave us with the euro? Well, here's what euro looked like earlier in the week. To start off, well, first of all, 1448 was a level I was watching for a while. That was the 50% retracement. It was also a nice acceleration point for the downside here. You had the 50 line for the downslope in there. Nice breakout. We rallied right into this key region. And what is this key region? This is the June low, 2016 high close, 1508 into 1530. Okay, I thought we were going to see a little bit more of a stringent resistance here. Now we spiked through, but we're still trading below this level at this point. So for me, again, not too surprised if we do see a little bit of a pullback in the euro. No longer interested in immediate long side exposure from here. If we get a decent pullback, I would like to reposition to the long side, but we have to wait for that to materialize. Here's euro now. Okay, really nice move to start off the week. You did get a little bit of a kickback off that region, but not much. We stayed constructive above 1366. Here's the top side breach, taking out 1508, taking out 1530. And this is, again, an area of which we could see a little bit of an interruption. Here's euro on the daily chart. Highlight that 1530, 1554 level, how critical of a region it is. Here's your lows from November of last year. Here's your high close for 2016. Here's your close lows for May, close lows for June, initial monthly opening range low, break, acceleration, right back into it. Okay, right back into it. So don't get suckered in here, okay? This is not a spot where we want to start pressing long exposure. We've had a nice 4-day rally. Today would be the 4th if we get it, or actually today would be the 5th, excuse me, if we get it. But a nice area where, if you're holding long exposure, you want to lighten up. If you're looking for near-term exposure on a scalp basis, I'd be really nimble on the way down if you're trying to short this. Personally, I'm not interested in that. I would use the setback to get back long again if we can get a nice larger recovery. But know the levels, okay? Know the levels. We can't be oblivious to the fact that this is just a huge pivot in price, irrespective of everything, okay? One thing I do want to watch is today's close. You see this slope here. Now, intraday, this region has been intraday, this region has been very effective as support, break, acceleration. We've broken through today, but the close is what matters here, right? Today's daily close is what's going to be the tell. So if we fail to close above this sort of pivot median line, the risk is for a move lower again. But this is certainly an area that we have to pay attention to near term. So a lot of these trades that we've been waiting for, the dollar pullback, we've finally gotten it. Now we're coming into that pivot where you want to sort of lighten up the load and watch how price reacts at these key zones. So euro on the daily. Again, just to put things in perspective, going a little backwards here, but here's euro on the weekly charts. Just give you a picture of where we turned from. Such a critical region. Former trendline resistance, 3-point touch, acceleration on the breach. Perfect tag. November highs from 2016. 50 line for the current upslope. And here we are breaking back above 1448 rather. So looking higher, a lot of things to look at here on the weekly chart as well into the close of this week. I do want to see this resistance trigger break if we have indeed put in a more significant near-term low in euro. So a lot of hallmark things to sort of look for as we get deeper into the week and specifically with Jackson Hole on tap. We'll see if that offers any volatility here. So the ideal play here, again, just to kind of go back to basic square here, if you're not in any trades, you're looking for new opportunities. The ideal scenario here would be to get a deeper pullback, maybe not quite as low as 1448, but certainly that would be like the ideal scenario. Even if you take a near-term retracement, and I was looking at this morning of this stretch, a 38.2 doesn't even get you that low. Okay, 38.2 gets you right here. You know what I mean? So if we take a little breather, sure, 114.85, look for a possible reaction, but really that's sort of the sweet spot, if, as it were, for a hold. You have the weekly open just lower and possible entries against the weekly opening range lows for the stretch. All right. Any questions on euro? Again, kind of here, you sit and you stare at price action. You want to find some structure to the ascent, so we have clear indication of when the slope is broken, the near-term upslope. But there's just nothing to work with here. Nothing to work with here. Yeah, it's a stretch. But this would be the sweet spot. Waiting for a deeper pullback, we actually went to 115.45. Yeah, you overshot that 115.30 target. Absolutely. Yeah, the high was 115.45. So it would be a sweet spot to pull back, right, Ty? That's the whole point. See if we can't get another position in on this one. All right, so that is euro. Questions, comments, concerns? We're making good time today. That's number 6. Some clarity finally in price. We'll always do that, right? Things will start to run really quick. Marco says on August 10th, we broke down a triangle from June. Aren't we just testing the bottom of the triangle for more downside? So are you looking at this slope, this consolidation here, right? So Marco says, yeah, I hear your question. And Ty says, my question as well. Good. Yeah, ask these guys. This is a good question. So I was personally using this consolidation in pink or magenta. Okay. You can use this trend line. My problem is this is only a 3-point touch. The second time you went through, you kind of sailed through it and tested it as resistance, though. So it does have merits. Yes, we are testing the bottom of this. This is why this would be the initial kickback. If this pullback breaks below 114.50, then Ty, Mark, I'm right with you. If that breaks, then yeah, you look for the resumptive measured move. Now, whether you're using this slope or whether you're using this slope, actually our measured move will be the same, right? Because the widest part of the consolidation is the same, right? Whether you're using this low or whether you're using this slope. So the measured move actually does take us down to 111.63. But the point is, guys, markets don't work in a vacuum, right? If this is the operative consolidation break and we already broke it, tested it as resistance twice, mind you, then that means this recovery could get all the way up into 1650 before it resumes on that move, right? The time value has no meaning here per se. That target could take another month or two to hit. The immediate advance is coming into initial resistance, whether you're looking at the level that we were looking at, 1530, or whether you're looking at that slope, caught it a little bit with more precision. This is an area of which, sure, look for the pullback. If this holds, I have to maintain a constructive outlook, right? 1450 breaks on a closed basis, Mark, Ty, then we're looking for resumption. These are soft targets, but absolutely, you'd be looking for the measured move into 111.60, 111.80 in that scenario. Does that make sense, guys? Trading is an if-then proposition, right? The broader picture is still bearish, yes, for the broader consolidation break, but this recovery could have legs beyond 1550. And the only thing that's going to gauge that is if on this pullback, we find support where we're supposed to. If that holds, again, I think we get a vault higher. If this gives out, then you look for resumption of the broader target. So, we've been playing the long side, yes. The long side, again, this was sort of where we wanted to stop or, book the rest of any long side exposure, 1508, 1530. It's the level that we've been watching. And now that we're in here, yeah, absolutely. The risk is for a little bit more of a setback. We can't call resumption to the broader downtrend, unless we get back below 1450. Marco says yes, right on. Good stuff. Ty, hope that offers some clarity there. All right. That is euro dollar number 6, 7 Aussie. Aussie with the ripperoo. Here's Aussie. So, oops. Here's what Aussie looked like early in the week. You guys all know the level I've been watching, 72 or 73.26 and 73.36. For me, that's a huge pivot. Okay. Northbound of that, and actually, last night as we were breaking higher, the reason I didn't highlight this level is because I didn't really have a play for you guys. The play for me was the long into 73, 27, 73, 36. That's it. If we were going to fail, if this was just a break of support, check back, resistance, this is what you'd want to see hold. Last night we were trading just above it, and I didn't want to really encourage you guys to mess with it. I didn't know if you were going to get the extension to the next target, 73.76, or if it was going to be a failure and a move lower. But this is, harkens back to the conversation we just had with euro, right? The consolidation break here actually gives us a measured move target down here at 71.30. So if we're going to see that target hit, guys, if the consolidation was a simple break, acceleration, check former support as resistance and move lower, that's the level we need to see hold. It didn't. Okay, it didn't. We broke through it with some conviction, I might add. Registered a high just shy of 73.70 to 73.65, I think was the high. Let me get you the exact number. Yeah, 73.66, okay, if you're round. And then here's the pullback. So objectively, that's now near-term support. I don't have any trades on this. If you're holding something or if you're looking for something immediate, I'd be looking for a reaction to this region. If the drop fails here, we get divergence. Specifically, if you get divergence into the 40 level, that would be an objective change in behavior. We're coming from oversold conditions back into overbought conditions. On the pullback, if we find support at 40 momentum, price finds support ahead of 73.27, might be a nice entry for the move higher. If we break back below it, I don't want to touch it. I don't know what's going to happen at that point. It could start to break down again. We'd have to start to rethink our downside levels. But right now, the whole focus for me is still on this critical pivot range. Don't forget how critical of a range this has been. Okay, really, really important. So all things held constant, if price holds above this, we have to respect the upside. But even the daily chart kind of gives us some pause, right? Taking it from the high in price, not the high in the oscillator per se, but the resistance trigger from the high in price, 1 point, 2 point touch, 3 point, 4 point. If we get that breach on a daily close basis and we're able to hold 73.30, I do think you look for a larger recovery. Again, monthly open resistance converges right on basic trendline resistance. That's right around 74.20. So there is room if we're able to get some material closes above this region. Ty says DXY, Aussie, and Euro and Yen all working on reversal candles today. A chorus. Yeah, so they are putting in pin bars. I wouldn't say they're reversal candles yet because they're all still trading positive, Ty, on the day. Dollar yen isn't. Aussie's is still trading positive on the day. Euro still trading positive on the day. Yes, not yet, but very close. Yes, yes. The only reason I bring it up, Ty, is because I get concerned when people say we're putting in a doji, or if we're putting in an outside candle like before the U.S. Open even happens. We don't know, Ty, right? As you say, look for the close. Exactly. Took the words out of my mouth, buddy. It's all about the close, right? I don't know. The U.S. Open hasn't even materialized yet. The U.S. markets could open and this thing could rocket right through 128.77. Then everything we were talking about means nothing at that point, right? This is sterling, by the way. I'm just showing you a blank chart. But another reason why I'm a little concerned on favoring dollar shorts at this point, even pound, the most pitiful of the majors on the dollar pullback. Um, this is still the support range. Support, 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 break, acceleration, probing through intraday, but it's going to be about the close here as well. Okay, if we close above this support zone, this slope, support slope, I call it, and momentum is able to pivot back above that 4-point touch support trigger, well, that would objectively shift the focus higher. Sterling's the last of the lot of the dollar crosses, guys, because you're playing with fire here. It broke downside of a descending slope. Typically from a technical standpoint, if this holds, you're looking for like 124. So I don't like playing sterling. Again, if you put a pistol to my head, I suppose I would rather be long, but I don't favor playing this at this point. Here's the intraday chart. Okay, it's just not a clean setup at the moment. I was looking at something like this, and we can get as granular as you want, but the question is there conviction on it? And I wouldn't necessarily say there's conviction here. Maybe the upper parallel further highlights that basic 618. Let's get rid of the 50 line here. Clean this up. Maybe something like that may offer some tell on price. Keeps the price constructive while above that February 2017 high at 127.06. But it's a low conviction trade. It's a low conviction trade. And that is number 8. Similar to Euro on 9th, we broke down a triangle formation from June. I see now just testing the trendline bottom still. Marco, which one is that? Oh, on Euro? Oh, that was for Aussie, you're saying? Yeah, I mean, again, it all depends how you're drawing your consolidation here, whether you're drawing it from here, something much more near term like this. The best part, Marco, is when we're drawing, and this is something that happens with me and Jamie all the time. We're drawing our pitchforks, or we're drawing our trend lines, we're taking our fibs, and all of a sudden we might have a different take. The slope might be a little bit different, but we're highlighting the same exact levels. Whenever that manifests itself, man, there's even more conviction on the trade. I always get super encouraged when I highlight a level for you guys, or I'm saying, look, there's a big confluence resistance here. Then all of a sudden, D will come on. I'm not sure if it's UD or who was it that used to always come on? And they would say, well, there's a weekly pivot there too, right? There's a monthly pivot there too. Great. The more evidence we have, the more conviction. So whether you're looking at this slope, Marco, or whether you're looking at the original slope I was watching, sure. Yeah, both of those would suggest, you know what, I think this one is one I'll work with at this point. Both of those would suggest, yes, you're at risk for a little bit more of a near-term pullback here. But for Aussie, if we materialize above 73 and we hold this support, it might refute this downside break. I'm not touching it now. If I had to, again, if you put a gun to my head, I would actually be looking to fade Aussie strength towards one of these two targets. If we get an exhaustion move, ooh, that's ugly. Okay, it's not going to help anyone, so don't work with that. Marco said that's what I did at 73.60, right on. Okay, so you're playing the short mark. Yeah, that's actually for me. That's why I didn't highlight anything yesterday. If we had woke up today and we had probed into 73.76, I would have liked to short that. The fact that we didn't get that high is kind of why I missed that entry, but nice, Marco. Watch this region, man. Okay. On your way down, this is where this whole zone, 73.27 into 73.36, is where you want to start to lighten the load. Maybe book some profits on there if we get it, but don't get too aggressive on that one, because if this does materialize into a basic flip back above a major support pivot, there could be more upside to go. He says, okay, right on. All right, that is Aussie. And we talked about sterling. The last two I have on here is gold and dollar CAD. I guess we should just do dollar CAD real quick. I don't really have much on this, guys. I just wanted to bring it up because we talked about it earlier in the updates from last week. The only major play here, the weekly chart, it's a mess. The daily chart, the basic premise of everything that we were looking at last week was 31.65. Well, it ended up holding. If you're hearing some frustration in my voice, it's because I missed the short, but it's okay. Look, 131.65 into 131.70 was just the objective weekly opening range highs. You had slope there. You had a 618 retracement there. I mean, it was loaded. Why I didn't take the short, I don't know. I just got skittish, I guess, ahead of that data on Friday for Australia, for Loonie. But here's what it looks like. I mean, look at this, guys. You can't make this up, right? So here's the reversal, break lower, takes out trendline support. We opened up the week saying yesterday, watch for resistance ahead of 31. The risk is still lower ahead of 31. So again, there was an opportunity to try to get on the short side here. And here's the move. Now, 2-hour outside reversal off the lows. You see a little bounce higher here. It's such an ugly trade, guys. Again, it's giving you some divergence into that low that we made last night. So I just don't like it. I'd rather be on the short side if I had to be in this trade, but from these levels, can I, encourage short exposure? Not really. Monthly open support comes in right here, right along that slope, just lower. You have the 100% extension from the yearly high. You have the 100-day moving average. You have slope. So what the heck do you do here? We kind of already missed the drop. At this point, I don't even want to look at dollar CAD until we get some clarity and a real move. All right, either a decisive break sub 129.68, or if we rally again towards 31, maybe another exhaustion trade. But guys, this is one of those trades where you have a very clear monthly opening range that hasn't given out, right above slope support. Wait for clarity. Wait for clarity. So a little disappointing that dollar CAD kind of moved without us, and then now it's kind of just drifter. But the broader slope still remains pretty clean. Still remains pretty clean. Any questions on Loonie? Again, I'm thinking kind of, recovery with the dollar today, maybe back towards 30.67, maybe even the median line. Ideally you get failure there for the drive into 130, but we'll have to cross that bridge when we get there. Okay, that is dollar CAD number 9 on this session. And last but not least, gold. Guys, we've been following it very closely in the webinar. I haven't given you an update on SB since earlier in the month, and here's, it's a while away. Here's what we've been doing since. This is the daily chart, guys. This thing is clean as can be. Okay. For those of you who have SB Premium, check the gold IDO search at 9:30 when the market opens. IDO search on the 3-month, 3-month look back, 1-month projection is looking at a 5% gain, average upside. If you take the 6-month look back, I think for the forecast, it's giving you a 10% positive upside. We've had multiple days. This is the daily chart that we were looking at. The only reason I bring it up is because what caught the lows was the exact lower median line parallel to the pip. Okay, We talked about the weekly chart, the fact that we've now worked on a consecutive 6 weeks of declines. The last 4 times that we saw 6 weeks or more were here, 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 and don't quote me, but I think the last one was 20 at some point in 2015. But you get the picture, right? So prices coming off of confluence support, broader weekly slope support, 786 retracement of the near-term advance from late 2016 to 618 key retracement of the broader advance from 2015. We have to respect it. We have to respect it. So the daily chart, again, really nice reaction. Pin bar never even made the close below 1170. Here we are again. You know, you're seeing a little bit of an exhaustion, momentum checking, momentum resistance in daily RSI. So you could get a little bit of a kickback here. We want to stay supported above 1175 to continue favoring the long side. 1204 and 1214, 1215 are still going to be your top side objectives. I like gold finding more support here. I like gold higher. So if we get, again, the dollar rallies today, takes a little bit of a breather. Look for the pullback. 1180 would be a nice support. I want to stay constructive above 1174. Again, top side targets 1204, 1214, 1215. Most of the DXY pairs have not had trigger breaks on the way. On the W, I'm not sure what you mean on the W, and many dailies. So remember, Ty, a trigger break and momentum is just something that we like to see as an added conviction, another piece of evidence to help support your thesis. It's not necessary that we need that on every single trade. Oh, trigger breaks on the weekly. Yeah, so the weeklies are going to be the last to give way, man. We can't always wait for these. A lot of times, if you wait for a trigger on the weekly, you've missed the trade. So when we're looking at weekly triggers and things of the or weekly triggers, you know, we're usually already in the trade, and now we're just waiting for that weekly chart to give us conviction on the position that we're in. You don't really want to wait for a weekly trigger to give out to prompt entry, right? Because then, like I said, those are going to be right confirmation. We're on the same page, Ty. And I will definitely try to get back to you today. I'm so sorry. I've been insanely swamped, but tentatively, let's see if we can do some point on Thursday. We'll talk. All right. Questions, comments, concerns on gold. You know, watch the upside. I immediately, as we said, the whole theme of the webinar here, you know, we could get some dollar reprieve, but ultimately, you know, we're still working on the fact that we came off pretty big resistance. All right, and that is number 10. Any other questions or trade setups you guys want to take a look at? Feel free to throw them on the message board now. If not, we'll go ahead and wrap things up a little early today, but some nice moves. My whole thing right now is, look, the move finally materialized, the dollar pullback, right? It seems like we've been waiting forever, but we've come into some nice levels. Let this thing take a breather. Let the dollar take a little bit of a reprieve. We're looking for repositioning. Specifically, euro is something that we're very interested in to see what kind of reaction we get here today off resistance. Dollar yen, same thing. Swing trades, you guys are short already. But we want to see this kind of fizzle out on this rebound here. And for Kiwi, same thing here as well. You know, if this daily chart holds, this region might be vulnerable for a little bit of a kickback in this trade as well. So there's a lot to look up for. Please put up the DXY again for a picture. Ty, which time frame did you need? Here's the daily chart. And the intraday hasn't really been updated, but there's not much necessarily to look for differently here. Hmm. Okay, so that 618 is the actual opening range high for the week. So objectively, that's a level I'd want to watch anyway. So I'm just going to leave that there for reference at 96.39. Um, this basic slope would suggest you basically want to stay bearish below 96, 96.10. Even if we get the ripperoo here, that's like initial area we'd look for failure. Interestingly enough, the weekly open actually comes in right there, as well as those former swing lows from last week. So if we do get the breach here on the correction, as we suspect, that's where we look for, exhaustion. All things held constant, we're still looking for that drop deeper in DXY. Makes sense? Ty says, got it. Thanks. Hey, you're more than welcome. All right, guys, we'll wrap it up there. Best of luck trading. I will see you guys tomorrow morning, same time, same channel. It pretty light on event risk, by the way, so don't keep your eyes more on price action as we get into the U.S. trade session. There's not really much on tap today. New Zealand, you do get retail sales, core retail sales numbers ex inflation tonight, so that's for the second quarter, and Aussie Westpac leading index, but the biggest event risk over the next 24, 48 hours is going to be the release of the FOMC minutes. That's tomorrow afternoon. So we'll get a chance to give you a prep for that in the webinar tomorrow morning. All right. Best of luck trading, guys. See you tomorrow morning. Cheers.